Hello, I'm BA Schrock, and welcome to another episode of Unlocking Your Financial Future. Joining me for part two of our lending talk here, we got Gary, Kubalski, and Keith Abramo. There we go, Abramo. All right, guys. Welcome back. Glad to have you back on part two.
Thank you very much, Ben, for having us.
You bet. So in part one, we kind of talked a little bit about the personal lending, just kind of diving in a little bit deeper about interest rates and adjustable rate mortgages. So if you have questions on that, tune into that. Gary and Keith also gave their contact info. If you want it from us, if you weren't able to grab it, just shoot us a quick note or give us a call. We'd be happy to connect you guys with them. They are with Union Savings Bank, which is just starting to make more of a presence here in Northeast Ohio. They've been around for a long time and sounds like a great shop to work with. So part two, we're going to talk about some different niche loans, I guess. I know I talked about some of the real estate investors, things like that, but we were talking off microphone here about blanket loans. So I think that's where we start. So, I guess, give me a brief overview of a blanket loan. This is more in I guess, regards to, we were talking about it from someone looking to build a house potentially, or also from a real estate investor that has multiple rental properties, wants to free up some equity, can do that with pulling all those houses into one. And it's kind of a hot button right now for you guys. And can you kind of walk me through that process, explain it a little bit better for me?
Absolutely. The blanket loans are really a great product that we have that allows us to combine a couple different properties or multiple properties together. So basically they'll have one settlement charge, one closing, and at the same time one mortgage. So if you have an individual that has an existing house and they're wanting to build their new house, what we're able to do is combine those two mortgages together, and then they don't have to worry right away about getting out of their existing home. They can actually look to refresh that property once they're in the new house. And the good thing about the blanket loan is that we'll do a partial lien release so that they don't end up having to do a new loan once they sell that existing property, which is nice. A good feature.
And so are you guys as a lender, I mean, obviously you're going to do your due diligence, how much equity you got in the house, run your own appraisal and things like that. What are you guys kind of looking for so that you're not going to get stung as a lender? Do you like to see like a certain equity, 50% equity in a house, 20? I mean, where's kind of a guideline from your angle? So if I'm listening at home and I'm thinking, okay, I might be building a house and want to sell mine, but I want to have to move to an apartment type deal. What would I have to look at as a consumer?
So what we'll do is we'll lend up to, so if you have property A and B, whatever those two home values are, we'll add them together and lend up to 80%.
Okay.
So there's situations where technically you can get cash out of the purchase as well because you have so much equity tied up in home A. Maybe. Yep. So it's essentially those clients where if you own if you have a home currently, you're probably looking at, you want at least 20-30% equity in the home currently to make it probably substantial to work. But for the clients that have a property owned outright or a little HELOC on the home equity line of credit or something on the home, I mean that's what it's tailor made for. But we will lend up to 80% of the combined value.
Combined values.
2-3 homes, whatever.
How do you do it on new construction then? So like if I said, okay, I'm in a house and I just use round numbers, it's worth $100,000 and I owe 50 on it. I could pull up to 80% of that value. If it's worth, I can go grab $30,000 equity and go start the new construction with that and stay in my existing house. Is that accurate?
Yeah.
Okay.
And we'll add in, we'll factor in the initial. When you build a home, the price can fluctuate a little bit, but we'll keep that up to date as well. But that'll be factored in as well, the new home.
How are the rates on that? Because is it I guess cause I'm thinking of like from a new construction standpoint. So like the logistics of it, does it go right into a construction loan, then it gets amortized out to like a 30-year mortgage type deal? And what I guess the rates on that, are they a little bit higher because it's a construction loan or no?
Not really. I mean, right now we're keeping them pretty much on par with where the fixed rate is.
Okay.
And again, being newer in the area, we're kind of
a little aggressive.
Giving a little bit more
aggressive
on our pricing. But no, it's not going to be one of those where, if you're expecting a 4 to 5%, you're going to get an 8% on this loan. It's nothing like that. It's going to be in the ballpark of where everything else is right now.
Yeah, it makes sense because I was, when we were talking, I mentioned the bridge loan, and we built a house for about almost 5 years ago now. And we were in our existing house, but we had to, sell our house to build the house. And it was one of those things where you can do a bridge loan, but then I got to looking at it, I'm like, well, I got to pay 2 closing costs. I got to do this and that. It just seemed like a lot of hoops to jump through. And I said, the heck with it. It was just the 2 of us. We didn't have any kids at the time. So I'm like, we'll just go move in somewhere and figure it out. So we opted out of it. So what's the main difference between bridge loan and these blanket loans?
So the biggest difference, just to kind of piggyback off what you said, is you're only going to pay one set of settlement fees.
Yeah.
So if you have 3 or 4 properties or just 2 properties, you're going to have to get multiple appraisals still, but you're only paying one settlement fee.
Gotcha.
Which is nice. The biggest difference from an application standpoint with the loan is there's no time restraints on it. Meaning, you hang on to home A, you buy home B, and you move into home B. Whether you decide to sell home A or maybe your plans change and now you want to rent it out, you're free to do whatever you want with it for however long you want with it. If you decide to sell it right away, that's fine too. But
that's huge because let's just think of the real estate market. If it goes down in that period of time and you say, what, I'm not ready to unload this thing, you could sit on it technically and rent it or
run it. It's way more flexible.
And we're talking about equity.
Yeah.
They have enough equity to cash out and then refresh their existing property before they sell it. So again, it's going to make it more valuable market for them.
Yeah, I like that. Now, explain we talked about, I like it from that perspective because I always like to relate back to personal experiences, and you hear these things and think I'm not crazy about, I opted out of a bridge loan because of the closing costs being too cheap and building a house while we're doing it. But in any case, I like it from the other angle of now I'm a real estate investor and I got 5 to 10 different homes and I'm renting them out to people, and I want to expand my real estate empire into maybe more industrial space or different spaces. Now I can go out and pool all those together on one note, right?
Yep.
And what's that process look like, and is I guess 2-part question, how's that process work, costs associated with doing something like that, and then is this blanket loan kind of a niche that Union Savings Bank has found themselves into? Because quite frankly, it's the first time I've ever heard of it. So I don't know if the big banks are not doing this or what. So kind of walk me through that, and I'll give you a lot there to unpack, but walk me through kind of how that works.
Yeah, the big banks, to your point, really aren't doing it. They're kind of doing more cookie cutter,
easy stuff.
The easy stuff, yeah, which you could get away with that the last 10 years, but now you got to get a little more creative. So from a cost standpoint and how the process works, technically there's not a limit to the properties that you can blanket. However, the sweet spot is kind of 4 or 5 at a time. So if you do own 20 homes, let's say, you're probably going to want to, listen, we could do all 20 under one technically, but I don't have a bedroom installed in the office yet. I have to go home at some point. But to your point, no. So you would pay for an appraisal on each property.
Okay.
Plus your normal, title fees and stuff. But the title fees, the settlement charges, it's all treated as one transaction.
One transaction.
So from transactional cost standpoint, you're paying 1 round of it instead of 2 rounds or 3 rounds.
Yeah, or getting a line of credit on each house, or a refi on every single house to pull the equity out. And by the time you pay 5 different closing costs, it adds up. It's expensive.
And typically, one appraisal company will handle all the properties. You might run into a situation where maybe, if you have a home up in Akron or Cleveland area, but you have another property down in Columbus.
Yeah.
Obviously, there's situations like that, but try to keep it as
simple as possible.
As easy as you can make a multi-unit loan go is, try to make it as easy as we can.
So the process is really the same, just a little bit more detailed, obviously with more properties having to do in figuring out like the property value, the appraisal, and the insurance and all this documentation that comes with it.
Right. Yeah. And this is something that you guys are seeing more from an investor angle, or do you do it from more like the home builder, the guy, or couples that are building a house, living in one? I mean, where's the
We're actually seeing both.
Really?
Yes.
A little bit of both right now.
I would say the two most common ones are, I think number one is the investor side of things. Even, we were joking, even just kind of from a bookkeeping standpoint, without having to have a spreadsheet of 30, mortgages that you're keeping track of and making sure paying on time and taxes and insurance, all that, you can kind of get that scaled down. The other side is kind of more on the personal purchase side, where a lot of the realtors that we work with are interested in these products because for the home buyer, it can remove contingencies to sell.
Right.
So if you're an individual that has a current home and you want to buy a new home, however, that pre-approval letter that you took all that time to fill out and submit information for says, hey, you can buy this new home, but not until you sell the other one. In a market that slowed down a little bit, but in a market that 6 months ago a year ago was super competitive. 30 offers going in on a home. You start coming up with contingencies, you're dead in the water.
Yeah, it doesn't matter how high it is, really. I mean, it just doesn't make sense.
The blanket loan allows a unique path to where we could take both homes, blanket them together, remove that contingency to sell, and you can get your offer more competitive, which is what it's all about. Right?
Can you guys? Is it just residential, or can you pull like industrial, commercial space? Well. So could you do like I always think of like myself, right? Own this building, own rental. Could I pull all those into one?
Yep.
Absolutely.
That's awesome.
Our sweet spot on the rental, or on the commercial side rather, we love like strip malls, retail buildings. We love apartment buildings. There's really nothing we'll have a hard line with as far as saying no to.
Yeah.
But again, everything's situational. Just conversation to have with Gary over here. And
sure. And that's the thing. I mean, everyone is so different. Like in our world, everyone that walks through the door has a different set of problems, right? A different set of goals, objectives, things of that nature. So we look at it from okay, what if I own multiple different spaces, and how do I try to maneuver through this path to get me the end result? So my next question to you guys is, if I came to you with looking for an idea or a problem, say I want to go buy this house or rent this house, could you then say, well, tell me about your whole situation, or tell me what you own, what you do, and then offer the best solutions? Is that like within what you guys do?
Yeah, absolutely. So for the number of commercial investors that I've worked with recently, what we'll do is we'll sit down, they'll give a brief explanation of their business and what they're trying to do, what sort of property that they're looking to build, and we'll look at the financial situation. They'll say, hey, I have a couple different properties. If they don't have enough money for the equity to put down, what they'll want to do is then use the other property as part of that. We can combine them again in that blanket loan, which really helps them out, kind of frees them from having to think we're going to get the cash, because investors typically put their money back into other properties.
Right. And then you don't have to force to sell and do a 1031 or anything like that. You can
1031 exchange or anything crazy.
Yeah, you can just take the equity out. And I think there's, I just think there's such an untapped market there with equity within people's properties that we talked about it last time. I mean, just with the home valuations, everything gone up for the past couple of years. Why not take advantage of something like this? For I preach to everyone that will listen to me at least. Hey, you want to go out and get into real estate? Why not try? If you got a home where you got your positive equity, if you want to take a chance, take a chance.
Yeah.
It's a piece.
You had 2008 happened, but you had a few bad years and a great 100 years of real estate. So,
yeah, absolutely.
It's the long-term play. The bank, the last thing on the blanket loans and kind of where it ties all together, the bank treats equity in a very high regard.
Yeah.
So if you do have equity in commercial property or residential property, it's, even blanket loan aside, it's a really, really strong compensating factor with us. If maybe something else is not where you need it to be, right? You need three things to get money. You need assets, you need income, and you need credit. If you got two of the three, and maybe one's kind of lagging there, if you got equity, that's usually good.
The big portion. And I guess we talked a little bit about the. I'm just, my wheels are spinning here, because again, like owning this, doesn't matter how it's owned. So like we own this building in a different corporation.
Right.
Can I show that as a personal asset, or is it a, how would the bank decipher that, or the underwriters look at that? Do you have a little bit of leverage work? You don't have to put your neck on the line here.
Yeah, no, but so we look at, on the commercial side, we look at property first and then borrower.
Okay.
So we look at your portfolio on the commercial side under, the businesses and stuff like that. And then if we need to go back into the personal side of things, we can look at those properties too.
Gotcha.
So we try to just go the path of least resistance first, but there is a kind of a plan B and C if all goes well to factor others.
Right, because I mean, if you own the business and you own the building, then the business owns. I mean, it kind of can work its way to an individual eventually.
Right. Location and the type of property and stuff like that is kind of what we look at first, as far, and rent rolls and all that kind of stuff to see what kind of income the building's bringing in, and then if need be, we look at you at a personal level.
Sure. Kind of back that up if you have to.
Correct.
What else on the blanket loans, or anything else that I missed or didn't hit on those that you guys want to make mention on?
I think we hit on everything. I don't want to info dump too much.
Yeah.
People I have no idea what these guys are talking about. It's one of those, to our point on the last conversation. We'll take the time. It's unique. It's like you mentioned you're not really familiar with them yourself as far as how they work.
Sure.
Everyone's used to the bridge loans, and it's like a cousin of the bridge loan.
Yeah.
It's like the better cousin of the bridge loan, I guess. But we'll take the time, and hey, we're not going to sign you up for anything that you don't understand. So,
Right.
But it's definitely a unique product for, I think, like you said, there's a pocket of folks on the commercial residential side that it applies to right now. So.
And I think Keith hit on a really good point, was we strive to educate our clients so that they feel comfortable about the loan that they're in. Because what we don't want is, we don't want somebody who has a lot of questions and feels insecure about the situation that we're putting them in, because we really want to put people in the best situation as possible.
Yeah, and it's comforting to see from our perspective, because there's so many times working in this industry, you see clients that met with this lender, did this or did that, and their job is to close that loan. That's it, and not to pick on Rocket, right? But that's. And I'm sure Dan Gilbert's not listening to my podcast, so I don't think he's going to get too upset. But
you know what? He does get close to the business. I will say that. But his care factor is off the charts.
Yeah, I believe it. You don't build something like that without being boots on the ground. So, but in any case, it's, to me, the difference that I've picked up with you guys just chatting a little bit is taking that consumer from start to finish and being with them. It's not about ultimately you want that loan to close, but I do feel that the client's interest is definitely first, and helping guide them along that best path is probably the most important thing.
It's a two-part equation. You got to care
right
about what you do, and on the business side you have to care as well, because it's just bad. I mean, not everything works and is 100% and goes smooth. That's just the reality of everything. But man, you start not closing loans, and I got a lot of realtor friends. You want to that gossip channel is not friendly when you're not closing their loans. So,
sure.
The reputation becomes everything at that point.
And I think that one of the important things is open and honest communication. When things aren't going well, that you're explaining that to the client just as well as when things are going well, and keeping them abreast of things so that they're not coming to the closing table with any surprises, or going through the loan with any surprises coming through at any time.
Right, and I think it helps that you guys are both very knowledgeable in this world, and this, it's, you didn't just start, and everyone's got to start somewhere and do, it's not a knock on those just entering the industry, but having that experience, and then also having the tools that Union Savings Bank provides for you guys to go out there and do the best job for your clients, I think is huge, because that's, I haven't seen a bank with that many options. I'm not, to toot your guys' horn there, it's pretty impressive to see that, and then entering this space in this market, I think will work out well for you. So
thank you. We appreciate that.
Yeah, you bet. Let's see here. Last thing, I don't know if there's anything else that I wanted to touch base on regarding this. How about you guys? Anything else you wanted to add, or anything else about Union Savings Bank? Anything? Any plugs?
Want to just say that we work with the local communities. We really invest in the communities, and we try to do events such as helping with food distribution. We work through the BOG ministry, which is put on a local event in Dayton. We did local home ownership fairs to kind of educate people so that they can actually start to look towards purchasing their first house.
Nice.
We're also sponsoring a bed building project this upcoming September 10th, where we'll have our staff in Cincinnati be building beds for those in need in that local area down there. And then we just recently helped pack 500 backpacks with supplies for children in need starting school. So with the Matthew 25 ministries. So as we grow, we continue to reach out to the local communities and see how we can help with our staff and our branch.
For sure. And I think that's always important to give back to the communities that have given you guys and given good clients in your direction. So last thing I'll have you guys do is add your plugs, how to reach you, get a hold of you if anyone has questions regarding any of the stuff that we talked about. And I wouldn't say it's got to be specifically a blanket loan or a mortgage. If you're looking to borrow any money in any regard, I think that's a good starting point. And I think, I don't know if it was Keith or Gary, one of you mentioned it last time, if one of the big guys said no, give us a call. And I think I can't reiterate that enough. Working with small banks is huge, and small businesses. I truly feel that they care for people and they want to help you. Not that the big guys don't. It's just that to them, it's you're just a number, and here you're a client. So anyone has questions about lending or any borrowing or anything in any regard around that, just give you guys a call or call us, and we can connect you with Gary and Keith. So give you guys info, and then we'll wrap things up.
Again, my contact information is Kubalski@usavingsbank.com. Which is my email, and then my phone number, 440-533-8451.
And then on my end, loan questions and stuff like that, I would say direct to Gary. Anything else related, if you want to yell about them or anything, call me. Just kidding. My number is 440-696-3156, and my email is kabramo@usavingsbank.com.
Alrighty. Well, and guys, I really appreciate you coming on and chatting with me and answering all the questions. And sorry if it was too many questions at once sometimes, but I love to learn this stuff. And like I said, I know a little bit, not as nearly as much as you guys do, but we know who to point them to if they come with questions. So if everyone has questions for us, you can reach us here in the office at 330-473-1060. You can email us at info@baschrock-fg.com. So again, guys, appreciate the time and coming in and talking, and we'll definitely catch up soon.
Thank you very much, Ben, for having us.
Yeah, thanks for having us, man. Appreciate it.